All right, good morning, good afternoon, good evening, wherever you're tuning in from. Um, Today we'll be doing a presentation over the PPP EIDL, kind of what's going on in today's modern world. And we have a very special guest today. His name's Andy Presti, and he's a senior partner at Presti and Nagley. We'll introduce him a little later, but before that, I need to do a little housekeeping. So today's webinar, obviously, is hosted by Zoho, and if you are an accountant or a bookkeeper or a CPA, go ahead and go over to zoho.com/CPA to kind of see the partner program we have. And we appreciate anybody that goes there, and we definitely appreciate our partners. And Andy over here, his firm is actually partners with us, and that's why we have him here today, kind of going over this presentation with you guys. And I wanted to also mention that this webinar qualifies for one CPE credit. In order to receive that credit, you need to attend for at least 15 minutes and answer 3 out of the 4 polling questions. And at the very end of the session, we will have a evaluation. If you need to fill that out as well in order to receive the CPE credit. And I wanted to talk to y'all about the left-hand side of the screen. Over there, you can see the chat box, handouts, and your questions. The chat box is really just a general area for you to kind of talk to us. You could tell us how you're feeling, or you could talk to us about, where you're from and everything, your favorite type of food if you want in there. But the questions box is actually where you want to go and talk to us about any questions you have for either Andy, Val, myself, or Tala. And we can go in there and actually answer them. And we'll present questions to Andy throughout the webinar. And at the very bottom, you can see handouts. Well, it's in the middle. Handouts. You'll be able to see the handouts we have. We have this presentation on there. We have Presti and Nagley's website. We also have an awesome PPP loan forgiveness calculation in there that you can kind of play around with. We have some other cool links. I would advise you kind of go there and check it out. And so the presenters from the Zoho side, like I mentioned, Andy will be kind of speaking throughout this presentation, but everyone on the Zoho side will be Val Steed. Val, are you there?
Yes, I'm right here, Nathan. Glad to be here. I'm a CPA, been a CPA for many years, started my career way back with Deloitte, was with a small firm for about 15 years, ran a training company for a number of years. So I'm very aware of the accountant space, and now working on marketing of Zoho solutions to accountants is kind of my primary goal, working with Tala and with Nathan. So we're thrilled to have a real practitioner coming, somebody who's actually in the accounting firm space right now, and that's Andy Presti. We're thrilled. This will be a great event, folks, and welcome.
And Tala, he's my partner as well, and we kind of go through these webinars together. Tala, are you there?
Hey there, can you hear me? Yep. Can you hear me okay?
Yeah, I can hear you okay.
Oh,
do you want to give a little background about yourself?
Yeah, just real quick. Well, actually, in addition to the background, so I've been at Zoho for a little over 5 years. Really enjoy working with partners and accountants in this space. So if you have any questions regarding zoho.com/CPA, you can always reach out to any of us or me in particular. One thing I wanted to do just real quick was launch the 0 number poll question, just so everyone is used to how this is going to run, because we're going to run 4 of these and you have to answer at least 3 out of the 4. So here's the first poll question for today. This does not count towards your attendance. There will be more that come up. So it's just, how are you doing? So you'll get an idea. So you'll vote like this, and we can share the results with everyone. You can see those results in real time. And during the poll questions is actually when we'll take some of the questions from the Q&A and present those to Andy as well. So if you don't notice an answer for your Q&A right away, just please be patient till at least the next poll question. That's it for me.
Yeah, thank you, Tala. And like I mentioned earlier, my name's Nathan Rogerson, and I'm on the marketing team with Tala and Val. And our job here is to help out with partners and help market the Zoho finance products. Without further ado, let's introduce Andy Presti. He's a senior partner at Presti and Nagley, and he's been in the accounting industry for over 30 years. So he has a lot of experience, and he's very knowledgeable whenever it comes to accounting and other business practices. And he actually has a lot of knowledge with the PPP and EIDL. That's why he kind of wanted to do this presentation with us. Andy, are you there?
I'm here.
Yeah, if you want to give us a little background about yourself, it would be appreciated.
Sure. So yeah, I mean, the little synopsis there basically says it. But for the last, very pertinent to this, for the last 4 months, we've basically taken the firm resources and put them towards the PPP, EIDL, unemployment, and any other COVID-related relief that was out there. So that's what we've been immersed in for the last few months. Other than that, it's a typical full-service accounting firm in New York City. We have about 40 people, and in a varied industries and what have you.
Yeah, that's awesome. Well, I really appreciate it. And thank you for taking the time out of your busy schedule to kind of walk everyone through this. Without further ado, I'll kind of let you take the reins and get started. Are you ready?
Sure. Okay, so I don't think it's going to serve anyone's best interest if we go through the rules of PPP and what have you. It's been out there for 3 or 4 months. This is the loan that is forgivable. The EIDL is not, just to get some basics out there. What we've been receiving recently are requests from self-employed individuals, mainly people who file a Schedule C, do not have employees. I'm going to get into a little detail on that specifically as it relates to applying for a PPP loan. But in general, all entities qualify, whether you're an LLC, sole proprietor, S Corp, C Corp. There are some limits on not-for-profits, but other than that, most entities, all entities qualify for getting the loan. The loan is 2.5 times your average monthly payroll cost. There's a lot of detail behind every one of these comments, and again, we're not going to get into the minutia of the rules on every specific item. But in general, your monthly payroll cost times 2.5 is the amount of the loan. The forgiveness is based on that same monthly payroll cost for the 24 weeks from the point that you've received the loan. That used to be 8 weeks. When the program first came out, they had said you could use the proceeds for 8 weeks on payroll, utilities, rent to calculate your forgiveness. They've now expanded that to 24 weeks. There is an option. You could still use 8 weeks, although I don't know why you would. Just another comment on this. This is new. It's new for the government. It's new for practitioners. These rules seem to change and get clarified every week or every other week. The main takeaway we're telling our clients is to be patient. Not to be patient on applying for the loan. That deadline is going to expire August 8th. But be patient on trying to calculate the loan forgiveness. It seems to change weekly, and most of the changes we've seen are in favor of making most of the loans forgivable. We haven't seen any changes that have put more restrictions on the loan forgiveness calculation. We've seen changes that have eased off on restrictions of getting the loan forgiven. In fact, extending the 8 weeks to 24 weeks, essentially, I'm not going to say in 100% of the cases, but essentially would almost make every PPP loan a 100% forgivable, even if you don't take into consideration rent and utilities. So when you think of the math, if the loan is 2.5 times your average monthly payroll cost, that's roughly 10 weeks worth of payroll, just rounding off. Not exactly 10 weeks, but close to 10 weeks. So if they're giving you a loan based on 10 weeks of payroll, and they're saying, and compare that to what you've spent in the 24 weeks from the point you got the loan, it's going to be a rare company that is not going to have 100% of the loan forgiven. I can't say that for sure, but it certainly seems like that was the intent of the code change about a month and a half ago, and they're talking about changing it again today. They're in debates right now as to what they're going to do to the PPP program on a go-forward basis. So absolute, the takeaway on if you've already gotten a PPP loan and you're concerned about the forgiveness calculation, You need to sit tight. What you might understand today, I can almost guarantee in 1 month will be different. And so far, the difference has been in favor of easing off on the forgiveness calculations, not making them more stringent.
Yeah, it's funny. Sorry to interrupt, Andy. I think it's funny you mentioned that, because we have been trying to figure out the calculations throughout this whole process, and it's every single week, like you're saying, it's changing. We're having to update our Excel sheet, our Zoho sheet, and basically have to go through there and change it weekly or monthly. And it's pretty funny that that keeps happening. But it's also a great thing, like you're mentioning, is that it's in favor of the businesses a lot of times.
Yeah. Take it from one of my, we put teams together to deal with different aspects of the CARES Act, and the team that was in charge of putting together an Excel file for the forgiveness probably are into it for 40 to 60 hours, and it's basically useless now. So it's frustrating, but it is frustrating in a positive way, because they are easing off and making it easier to have it forgiven, not more complex. So we've stopped trying to update our spreadsheets that we were giving out to clients to use to calculate the forgiveness. It just makes no sense. A lot of the institutions that gave the loans aren't even accepting forgiveness applications at this time. So even if you got the loan way back in April, and let's say the 8-week period is gone, or you feel you've already expended 100% of the proceeds on payroll and you want to apply for the forgiveness, a lot of the institutions are not even accepting the forgiveness applications. So the absolute takeaway with the forgiveness is to sit tight. I believe in the end, barring some very, very one-offs, that 100% of the loans are going to be, or 100% of everyone's loan is going to be forgiven.
Mm-hmm. I do have a question.
We've got a few questions up here, Andy, if you don't mind. Let me just ask these. One person said, and I've been holding this person's question. It said, John Webster asked, are you going to cover how to get EIDL grant forgiven when you also have a PPP loan?
Yeah, so the EID, so let's cover some basics. The PPP loan is a potentially forgivable loan. That's the one that's currently under debate in Congress and what have you. The EIDL loan, Economic Injury Disaster Loan, that is not a forgivable loan, but that loan has two pieces. It has a grant and it has the loan, just to give a quick background. So this is the loan that has been around, that the government has promoted for years. You know, if a tornado comes through, takes your house down, and you apply for a disaster loan, the grant portion was meant to get someone money very, very quickly. In other words, if you applied for a disaster loan, within a day or two, they would process the grant portion, which could be $5,000, $10,000, $2,000, $8 amount. And then the other loan, the actual disaster loan, which has to be paid back, could take a week or two or a month to process. So the grant was designed for immediate relief to someone who has been in a disaster. Never has the government thought of the situation we're in now. So they had to redo the entire disaster loan program, but the grant was still there. And the grant was calculated at $1,000 per employee. I believe it's the next slide. If you go up a couple of slides, it's, go ahead, one more. One more. Right, so close to the bottom. The maximum EIDL advance or grant or whatever you want to call it, some people called it an advance, some people called it a grant. They capped that at $10,000, and the calculation was $1,000 per employee. That piece of the EIDL loan does not have to be paid back. But in the early calculations of the forgiveness of the PPP loan, you had to subtract from the forgiveness amount the amount of the EIDL advance that you got. So you can't double dip here. So let's assume you got a $40,000 PPP loan and you got a $5,000 EIDL advance. The $5,000 advance does not have to be paid back, but the $40,000 forgiveness application, you needed to subtract $5,000 from that calculation, so you'd only have $35,000 of the PPP loan forgiven, not $40,000. So that's how the EIDL interacts with the PPP, and even that is up for discussion whether Congress and the Senate are going to basically say, look, they're both forgivable, don't worry about it. So the EIDL quote-unquote grant was this EIDL advance of the bigger EIDL ultimate loan that someone got. Now, this has been suspended. This ran out of funding. The EIDL advance piece, not the EIDL loan. The EIDL loan you could still apply for. We've done about 20 applications last week. It's still being funded. But the grant or the advance piece is the only piece that ran out of funding. So if you applied for an EIDL loan today, you would not get the advance or the grant. It's all one application as well. There's no separate EIDL grant application. It's part of the EIDL loan application. So if you did a loan today, if you applied for a loan today, you're not going to get the grant or the advance. That piece has run out of funding. May resurrect tomorrow, who knows? But right now, that has run out of funding.
Okay, yeah, that is interesting. Do you know how quickly it ran out of funding?
People were getting the advance up until about 2 weeks ago.
Okay, cool. Well, all right. Well, I'm going to pause the webinar right now and just do our first poll question. And like I mentioned earlier, you have to answer 3 out of the 4 in order to receive your CPE. And I'll kind of share the results. So the question is, what is the maximum annual payroll coverage per employee? And a lot of people are getting this right. I feel like the government and everybody's been hammering that in. And we'll go to that slide here in a second, too. All righty, I'm going to give it about 5 more seconds. Okay, awesome. So it looks like the majority of everybody got it right, and the answer is the 100,000. So let's go to that slide so Andy can kind of talk about that a little bit more. And that is slide 2.
Yeah, one more for you, Andy, while he's flipping slides there. The question from Veronica is, will you be discussing tax implications of PPP and EIDL loans?
Sure, I can go over them right now. So typically when a loan is forgiven, right? So if you owed the bank money on a credit card or a mortgage, and for whatever reason the bank forgives that loan, that is income. It's called forgiveness of indebtedness income. So one would think, well, if the PPP loan is going to be forgiven, you would have forgiveness of indebtedness income. They have come out and said that the loan forgiveness is not taxable. But when you think about it, so if it's what you spent the money on will also not be deductible. So if you received $50,000 of a PPP loan and you spent the $50,000 on payroll, while you don't have to pick up the $50,000 as income, you cannot deduct the $50,000 of payroll expenses that you paid. Now, the only twist to this, right? So if you're an S Corp, if you're a C Corp or a partnership with employees, that's going to be sort of a tax neutral type thing. You were handed $50,000, you don't have to pay tax on it. But if you used it to pay payroll, you're not going to get that deduction. That's fairly straightforward. If you are a Schedule C, so a Schedule C is a self-employed individual, no partners, no corporation, could be an LLC, could be a single member LLC, right? But you file a Schedule C on your individual income tax return. So if you're a Schedule C who received a PPP loan, they have not come out with clarity as to what they're going to do here, because a Schedule C doesn't take a deduction for paying yourself. So if a Schedule C has a $50,000 profit for the year and you received a, $10,000 PPP loan, the PPP loan's not taxable, but there's also no deduction to reduce. So we're not sure how they're going to treat that yet. It is a little bit of a windfall under the current code as we read it for a Schedule C filer, because they're essentially receiving the loan proceeds forgiven and they're not reducing any corresponding deduction, right? But that's, I don't want to get too complex with that, and the government will probably clarify that at some point, but right now it's a little bit of a loophole. So that's the EIDL loan is not forgivable, so there are no tax implications. So when you receive a loan, when you receive any loan, those proceeds are not taxable. So if you go borrow $100,000 from the bank for your business, that's not a taxable transaction, nor is paying the principal back a deduction. The interest is deductible, but not the principal. So when you receive an EIDL loan, there is no tax effect. So it's not taxable income to you. What I want to do is just pop back one slide here. Okay, so back on this. Yeah, so I've really covered everything on this. One thing I do want to get into is this second line here. Schedule C, no employees are okay, because over the last 4 to 6 weeks, 8 weeks, that's really where the focus of the questions have been. I didn't think I qualified. I don't have any employees. I don't file a business tax return. I didn't think I qualified. So you do qualify. So if you file a Schedule C, you have to look at line 31 of your 2019 Schedule C. Now, you do not have to have filed your tax return yet. I've gotten that question a lot as well. I haven't filed yet. It wasn't due until July 15th. In fact, on July 15th, I put it on extension, so I still haven't filed. A draft is fine, as long as you have it, but it has to be a 2019 Schedule C. You cannot use 18. You cannot use just like in Excel, here's my income and expenses. You have to have a 2019 Schedule C. So when you have that Schedule C, the loan is calculated off of line 31, which is the net profit or loss. You can't use more than 100,000 in the calculation. So if line 31 was 100,000 or more on your Schedule C, the loan calculation is 100,000 divided by 12 times 2.5, which is 20,833. That's the maximum amount that a Schedule C filer with no employees, because you could have employees even though you're filing a Schedule C. You're not one of them, but you could have other employees. The maximum amount is 20,833. So just a quick, if line 31 is 60,000, it's 60,000 divided by 12 times 2.5. The loan is 12,500. Under current rules, the forgiveness calculation is taking that same number, that same Schedule C number, dividing by 52 and multiplying by 24. So mathematics would not allow any Schedule C loan not to be 100% forgivable. I know it's a double negative, but so essentially every Schedule C loan is going to be 100% forgivable based on the current understanding of how they're going to work this through. That may change, we're not sure, but right now, if you're a straight Schedule C and you got a PPP loan, just by mathematics, it's going to be 100% forgivable.
Yeah, I do have a question kind of about that 24 weeks. Do you see it kind of being concerning for a lot of small businesses to go for that 24 weeks just because if they have to keep employees employed, they have to keep them employed for the entire 24 weeks rather than the 8, correct?
Well, so when the law first came out, it was 8 weeks, and there were other restrictions, right? If you dropped your full-time employee equivalents, FTE. So if you had 10 employees and after the 8-week period, you only had 5 employees, then the amount you paid during the 8-week period would need to be reduced, right? So there were ways that the forgiveness calculation could be affected by things like employee count, the amount you paid every employee. If you reduced an employee's compensation by more than 25%, there were reductions in the forgiveness calc. Extending the 8 weeks to 24 weeks, even if you had a full-time equivalent reduction, still not 100% clear how that's going to affect the calculation, because the amount you're starting with in theoretically is going to be such a high number, right? Let's talk about weeks. Suppose your payroll was $5,000 a week, and I know it's not exact, so the loan was roughly $50,000 if your payroll was $5,000 a week. Well, now you're going to compare that $50,000 to what you paid over 24 weeks. So even if you paid $3,000 a week for 24 weeks, that's more than $50,000. But is the full-time equivalency reduction going to take effect off the gross amount that you paid? So even if you had to reduce that by 25% or 40% or 30%, you still might be above the $50,000 you borrowed. It is still unclear what's going to affect what, and if the full-time equivalent is really going to have an impact on this, because you're looking at such a higher number that you're starting with. So in that same scenario, if you kept all your employees consistent, you're going to have, what, 24 times 50? You're going to have over $100,000 of payroll. Well, you only borrowed 50. So what's going to take that 110,000 or 120,000 in this case down below the 50? What reduction multiplier? Either full-time equivalents, or you didn't pay as 100%. It's still unclear, but I really do believe that the intent of the last change was to make the loans 100% forgivable. In fact, there's talk now in this new debate that's happening this week that they're going to expand the forgiveness calculation even further. It just feels like that's where they're moving with this. Can't say that 100%. But
I see the same thing too, Andy. I read the same tea leaves that you're looking at, and I think they're really trying to get this to our businesses that are really trying to make this all work. They're just going to wash it, in my opinion. Now, you can't count on that. That's just our opinion, but that's the way I see it too.
I truly believe that first, let's recognize that the program was it was a mess. When it first came out at the end of March, beginning of April, it was a mess. The banks weren't prepared for it. People had trouble getting the loans. The 8-week period was supposed to end June 30th. By May 1st, very few people had the loans in place. So the whole thing was a mess, and I think they've recognized that. And the most recent change from an 8-week to 24-week, I mean, we sat back and said, I can't imagine. Why didn't they just say everything's 100% forgivable and be done with it, and move on? But I think that's where they're headed with it. Now, some clients have said, I've had the loan for 12 or 14 weeks. I want to get it off. I want to get it forgiven. I have to tell you, just sit tight, be patient. The only reason is if you need, for some other reason, to get this loan off your books. For whatever other reason, you can't have this loan sitting on your books, then I would push for the forgiveness. But I don't think you're going to be successful, because the banks are not even accepting applications, the ones I've dealt with anyway.
Right. In the direction they're going, it obviously looks like you're going to have a better chance of getting forgiven, because currently, based on the form, I went through the form in detail last day or two. And if you've got an employee where you cut their payroll more than 25% in your covered period, the minute you apply for that loan, that doesn't fall into one of the safe harbors. And that amount that you cut that payroll, you have to pay that back. I think off the forgiveness, I think they're going to turn that part around. And that's my impression of what they're going to do for that, that 75-25 cut business, I think it'll turn around, but we got to wait and see. If you apply right now, they'll apply the rules right now. And I honestly don't know of any banks accepting early forgiveness forms either, Andy. I've not heard of one yet.
Nope. No. So the only thing I can guarantee is, as the rule stands today, it will change.
Right. A couple questions for you too, off of some attendees. Matthias asks, if a business were bought and making seller note payments, can the PPP loan be used to pay these seller note payments?
Not towards the forgiveness calculation, no.
Right.
So, payments to those seller would not be in the loan forgiveness calculation. But a lot of people got hung up on the tracing of the money as well.
Right.
So I took the 50,000 PPP money and I put it into a separate money market account. Okay. But then I used my regular account to make a note payment to the seller, but then I took the money out of the money market account because I was short for payroll. So what are you using for what? Doesn't really matter. So, if it gets commingled with all other monies and you don't pay payroll at all with any monies and all you do is make note payments, you're not going to have a forgivable loan.
Cool. Well, before we continue, I'm going to go ahead and launch the second poll question. And thank you for kind of going through this, Andy. We really do appreciate it.
No problem.
And it says the updated deadline to show FTEs that are equivalent to February 15th is. Cool. I will show the results here in about 5 seconds. So, Andy, do you think they're going to extend it anymore, or do you think August 8th is just the cutoff, and then whatever funds are left, they're just going to leave them in there, put them towards something else?
No, I think there will be another. They're going to call it PPP, but just another program to help small business.
Yeah.
If you want to call it PPP version 3, fine. I think it'll come out with new regs. Some of the things I've read, none of this is law or rules, but they're going to target smaller businesses with this new round because they feel it was the smaller businesses that, either because of lack of ability to get the loan or they just missed it or what have you, were really affected disproportionately than businesses that have internal CFOs who are all over this.
And we're organized, got the applications going and stuff like that. Right.
Oh, yeah. Yeah.
I talked to a number of very, very small businesses that were quite paranoid about the forgiveness side of it. And they're like, whoa, we've never borrowed money. We're proud business owners. We're worried about getting stuck in some government thing payback. And I'm like, hey, this looks like really free money to me to just keep you alive, guys. They want to keep you alive. But a number of them, I think, hesitated because of that. So anyway, let me ask you one other question, too. I got another attendee that's got a question here, Andy. What if your LLC was organized in the middle of 2019 and was not in business in January of 2019? How do you calculate the average monthly income? I only had Schedule C income September through December 2019.
So with Schedule C, the only guidance we've seen is you use your bottom line profit. Now, I recognize that may not be a clear indicator of how much you've made monthly for the last 4 months of the year. But if you made $10,000 a month for 4 months, you have 40,000. 40,000 is line 31. And that's what you use, even though it may not be indicative of making $10,000 a month for the entire year. Now, the other thing I'm going to say here is I've seen applications go in by clients completely incorrect, and the loans get funded. So this is definitely the type of story that, well, I sent them just my bank deposits for the last 4 months, and I wrote them a letter, and they approved my loan. I'm like, okay. I mean, I've gotten so many loans denied without proper documentation. It all comes back to providing the Schedule C. Yet other loans from other banks have gone through, I don't want to say incorrectly or with lack of proper documentation, but they've gone through. So you might hear stories of people getting loans without a Schedule C or using a 2018 Schedule C.
Right.
I'm just telling you what works all the time. Those other ones might work. It depends on the institution, because again, the SBA is not reviewing any of this. It's up to the bank to certify to the SBA that they're comfortable with your numbers. So each institution can set its own rules as to what's going to make them comfortable. What's the common denominator from the institutions that we've applied through? I'll jump over here. Bluevine, PayPal, and Cabbage are the most recent three that we've used in the last 4 to 8 weeks for Schedule C loans, are all consistent. This is what you need. You need a 2019 Schedule C. You can't submit 18, they'll bounce it out. You can't submit just a P&L out of QuickBooks, they'll bounce it out. I'm not saying other places won't accept it, but this is what's worked for us, and we've done about 100 of these in the last 6 weeks, and with very, very few problems if you have all of this information. So
another question about the EIDL.
You know, your bottom line Schedule C is going to be 4 months worth of your profit. Unfortunately, that's what would need to be used.
Andy, starting to jump in here. Another question on the EIDL advanced grant taxable. Is it taxable income for a Schedule C filer who did not get a PPP loan? That grant, is that taxable income if that's all you got to?
The grant is never taxable income. All the grant can do that would affect your taxable income is potentially reduce the forgivable PPP loan.
Very good. I think I've got another one here, and I'll reply to that one. What would happen to employment staffing agencies who hire temps?
That's a unique circumstance. That would be. I don't even want to start to get into, because that's got a whole bunch of issues, revolving, with it, because people come and go. The full-time equivalent calculation, the comparison to what month, February of 20, or you want to compare to average 19. There's a lot of issues with temporary employment staffing agencies. So are you talking about an employee staffing agency as a business, or I'm a business who hired temporary workers?
Wasn't quite in the question, and we'll see if they pop the question back up again related to that discussion.
So just along that line, if you are a business and you pay 1099 individuals, they do not count towards any loan forgiveness for your business. That's one. If you hired a temp agency and you paid the temp agency and the temp agency paid the employees, that's I'd have to look into that, but I would think, I could argue both sides of that. Like we have other similar circumstances where we hire a PEO, right? A PEO is a professional employee organization. ADP has a PEO. The payroll in our firm is paid through a PEO, meaning I am not the technical employer of these people, ADP is, but those people still qualified for all the calculations in either getting the loan or having the loan forgiven. I'm not sure if a temp agency would be at that same level. It might, which means you'd have to get reports from the temp agency for how many people were hired, how much they were paid, even though you paid them through a temp agency.
It looks like they actually run a staffing agency and they pay the employees W-2. So looks like to me, they just treat those as regular employees.
Oh yeah, if your business is a staffing agency, then they're absolutely employees.
Right, just figured 2.5 average monthly payroll, right?
Right. You want me to go through some of the questions? Are you guys going to field those? You want me just to continue?
Trying to field as many as we can, T. Let's see where we stand right now. I got another one here. I had 10 part-time. This one's a little tricky. I had 10 part-time 1099 contractor software developers in 2019. Converted 6 to full-time 1/15/2020. How do I calculate 2.5 monthly payroll?
So you can use full-time employees effective February of 20. The problem here is you don't have any payroll in 19.
Right.
I believe you can look at the payroll for January and February and do a calculation as to what your full-time monthly payroll cost is. I haven't done one of those in a while. I have to look back and see. But I know you're able to use 2020 if that's more indicative of your current business circumstance. Definitely in February of 20 to compare for the full-time equivalents. I have to see on the actual monthly calculation how that would work. You're only going to have maybe a month's worth of payroll, actual payroll. Everything else was 1099. I know you cannot use the 1099 because they can apply for their own PPP loan.
Just a reminder that we will have Andy's contact information at the end of the slides. So if y'all want to reach out to him, feel free to.
Yeah, so let me get that out of the way because I've done a bunch of these. So if anyone has any specific questions, feel free to email me. You know, we're not looking to start any clocks on anybody. We're trying to help everyone through this mess. If it's something that is very elaborate, I'll certainly communicate with you and say, look, you're talking about a 4 or 5 hour engagement here to calculate what you're asking me. But most of the questions I can deal with in an email or a quick phone call. I'd be happy to go through any questions that anyone has who's on this call. There's my contact info. Email's the best. That's the easiest way to sort of go back and forth. Sometimes we'll have to get on the phone because it's too much for me to type, but feel free to reach out, not a problem.
Yeah, for sure. So yeah, we have some questions trickling in right now. Let's kind of go through them. And you're welcome to kind of click on the questions box as well if you see anything in particular.
So I want to go to that first one. Would an LLC owned by 2 S corps with no employees be entitled? So one problem that we did run into is if you're operating in an S corp. So let's talk a more practical. I own 100% of my own S corp, but I don't put myself on payroll, even though you're supposed to, right? There are other tax rules why you should be on payroll for a reasonable amount of compensation in your own S corp. But let's assume you did not. So you file the S corp return. There was a $60,000 profit. Now I want to apply for a PPP loan. The problem is because there's no self-employment earnings, we've had difficulty getting that PPP loan approved by simply submitting the S corp, because there's no employees in the S corp. You're not filing a Schedule C, so we can't use that. So we have to use the S corp 2019 K1 that you received that shows 60,000 profit, but no self-employment earnings, no earnings that are subject to Social Security taxes. So that's been problematic, having an S corp with no W-2 employees. So that is one area that some loans have gone through. Most institutions have bounced that back and said no.
Okay.
The documentation on so I have completed about 100 PPP applications. I guess that's Schedule C. It's still unclear, the forgiveness on a Schedule C. The most recent guidance is the last line, the last 3 lines of this slide, that it's a simple mathematic calculation. Whatever the Schedule C line 31 divided by 52 times 24, that's the amount that could be forgiven, which will be more than the loan. Now, I have seen that they're looking to look at 2020 information, but the loan forgiveness could be in November. 2020 is not done. I don't know how they're going to do that. So like I had said before, I think it's all leaning towards 100% forgiveness. Can't promise you that, but it appears that's what's going to happen practically.
Okay, before we continue, I'm going to go ahead and launch the third poll question. Like I mentioned earlier, you need to answer 3 out of the 4 in order to receive your CPE. And we only have Andy for about 15 more minutes. So if you have questions, please put them in there so he can answer them.
John, I read your question on the monthly rental part with the landlord's kind of heavy-handing you. I don't have any great ideas here. I don't know if Andy, if you want to look at that, but this is where he's got a local landlord that's demanding rent and they're back probably behind on rent, and he's probably going to lock them out and liquidate them. That's not something we could really give you great advice on here this session. You probably need to see if you can talk to a local attorney if they can get you some ideas or some help.
Well, but as far as so I guess the question is, if you pay something in cash, as long as you can prove to the bank that you paid it, right? It's up to the bank to determine the documentation is sufficient to their level that you've actually paid it. So, whatever documentation you can show that you paid the rent in cash should be fine. There's a question below that. So I got an EIDL grant for $7,000 and a PPP loan for $50,000. So what that means is the full $50,000 will not be forgiven. The most in that circumstance under the current rules that could be forgiven is $43,000. But the EIDL grant is not taxable either. So you're getting $7,000 there, $43,000 from the PPP. You got to pay back $7,000 to the PPP. Yeah, somebody wants you to share the Excel template. It's going to change. I would not. I know everyone is concerned about the forgiveness, and I know it's difficult just to hear someone like me say, sit tight, don't worry about it yet. But honestly, that is the answer. I would not expend any effort or time right now on the forgiveness calculations. I truly do believe that the rules will change, and they're going to change for the better. Payroll deferral always been. Charles, regarding in calculating your monthly payroll, you're able to use the wages you pay plus certain employer taxes. Unemployment is the main one, not the Social Security tax, not the matching of the Social Security. That's not considered in your monthly payroll cost. You know what? There's one other thing before I continue with the questions. So I went over this for people who have a specific Schedule C. We talked about the EIDL. Now, the EIDL loan has no payments for 12 months. It does not mean it's not accruing interest the minute you get the loan. The interest accrues from day one. Some people have said, I've got approved for $150,000 EIDL. I really don't need it, but I'm not sure what the balance of the year is going to be. My advice is take the loan. If you have to pay interest on it for 6 months and it turns out you didn't need it, pay it back, and that 6 months interest just chalk up to an insurance policy, just in case. But I would take the EIDL loan if in doubt at this point.
There was a couple of questions about multiple PPP loans, Andy, but as far as I know, you can only apply once for one PPP loan, correct?
Only once. There's no such thing as multiple PPP loans. You can amend your initial application if you feel you didn't do it right, if the bank you got the loan through would accept it, but you cannot get 2 PPP loans. If you receive the initial PPP loan for which was enough for 8 weeks, can you get more money for 20? No, they have not changed the calculation of how much you can borrow. That is still 2.5 times monthly payroll. The only thing that changed was the forgiveness period to use in figuring how much of that you've spent on payroll from 8 weeks to 24 weeks.
Yeah, I saw a lot of people whenever they first discussed on going to 24 weeks, a lot of sole props were speculating that they were able to receive more money for themselves. But
no,
yeah.
Nope. So sole props is actually, I mean, they get approved in 24 hours. Those are the easiest ones with the proper documentation.
Mm-hmm.
If you have everything here and it's clean, one other thing, your driver's license address, if it should match your bank statement address, which should match your Schedule C address. The minute you put a different address in one of them, they all hiccup.
Mm-hmm.
So do your best if you can to make those three match. We've actually redone Schedule Cs for clients that have already been filed just to change a DBA and an address because we didn't want it to bounce. We didn't change any of the numbers, but at least we made the address match and the specific DBA match the bank statement.
Yeah. Typically, what have you seen with these loan applications as far as banks reaching out to get the proper information? Are they just dropping the client, or are they actually trying to get the client the loan? And, you know, with the home loan and everything, my lender was reaching out to me for all the documentation. Is this one more competitive where they're just like, you know, you missed the ball, basically?
So we have to separate that question from Schedule C to regular businesses with W-2 employees.
Yeah.
On the W-2 employee side, especially if it was applied through the bank you deal with. See, initially everybody went to the bank that they deal with. They thought that was the proper guidance, right? Chase, B of A, whatever, Wells Fargo, TD. And when they all hiccuped, then other players came in and we'll process your application for you, right, on behalf of the bank. So the initial banks, you actually spoke with someone, they went through it, and so on, so on. Recently, like these that I have on the screen, you never need to speak with anyone. It depends on the timing. So right before the June 30th initial deadline, PayPal, Bluevine, Cabbage, and I'm not talking good of one or bad of the other, they all hiccuped. Applications went in, you heard nothing. 4 or 5 days went by, sent follow-up emails, you heard nothing, could not get through on the phone. Now that things have eased up and they're not as busy as they were, yes, you get immediate callbacks, answers, emails. If you put an application in, you don't hear anything in 24 hours, you get on their site and email them, they get right back to you. But right now, the communication is fantastic. Back then, it was problematic because they had thousands of applications. And these three are all internet-based. You never have to speak with anyone. It's all done via email and uploading documents. There's no interaction with a human. And when it goes well, it goes very well. When it goes bad, there's no one to talk to. It's a problem. So,
Andy, here's one that might play for a lot of folks. Can I assume this is a Schedule C person because they're saying, can I receive unemployment when I get the PPP loan?
No. So I've gotten a lot of unemployment questions. I'm not an unemployment expert, right? And unemployment doesn't even know what to do because they've never had to deal with this. Self-employed individuals were never able to claim unemployment. So even I'm in New York. So New York Department of Labor, they don't know what they're doing with this. But when the rule was 8 weeks, when the PPP first came out, it was very clear that the minute you got the PPP loan, you cannot claim unemployment if you're self-employed because now you're considered employed for the next 8 weeks. That was very clear, out there, easy to understand. They changed it to 24 weeks with no further guidance. So now we have self-employed individuals who are still no longer working saying, well, I got a PPP loan for, $8,000. If I can't claim unemployment for 24 weeks, that's crazy, right? 8 weeks you could understand, that's more in line. But now 24 weeks, the only thing I could say is the rule said initially you cannot claim unemployment the minute you get a PPP loan. And I have not seen, and now each state's going to have their own guidance on this because each state's unemployment is run by that state's Department of Labor. And some states are tougher than others with unemployment. New York has come out with no guidance. And I'm still advising people you cannot collect unemployment while you're under a PPP loan as the owner. Obviously, if you lay off an employee, they can go to unemployment. But you as the owner, whatever you received for yourself through that PPP program, whether you are on W-2 or whether you're self-employed on a Schedule C, you cannot collect for yourself unemployment.
Yeah, before we answer these last couple questions, I'm going to go ahead and launch the fourth and final poll question. You need to answer 3 out of the 4. And also, if you want to receive that CPE credit, please stay till the end for the evaluation.
Andy, are you familiar with Cabbage? I'm not familiar with Cabbage. Is that a bank?
No. So Cabbage, Bluevine, and PayPal. Well, PayPal is sort of a bank.
Okay, sure.
All they are. So I believe Bluevine is WebBank in the background. They're closing their loans through WebBank. All they did was develop the online portal application process to streamline that on behalf of banks. So Bluevine is not a bank. Cabbage is not a bank. They are closing the loans. So when you get the actual loan documents, I'm not sure which one of them is with WebBank. I'm not sure who the other one's with. But all they did was fill a void of accepting applications, approving applications, verifying the calculations, and getting it to the point of loan documents and closing. And they're very efficient at it. So, Jonah, I received EIDL of 10. I'm not sure if that's the EIDL advance or an actual EIDL loan. Let's assume it's the advance. And later got PPP for 50. Does that mean that the EIDL is repayable? No, the EIDL EIDL loan is always repayable. EIDL advance or grant is never repayable, but it could reduce the forgiveness of the PPP loan, which basically means a portion of the PPP loan has to be paid back.
Yeah.
So in that if you got a 10,000 advance and a 50,000 PPP loan, you got 60 total. Only 50 is going to be forgivable.
Mm-hmm. And only the 50 will be considered taxable income, correct?
Well, no, the loan forgiveness is not considered taxable income. It's not taxable. The loan forgiveness is not taxable, nor is the EIDL grant.
Okay. I was reading that question wrong. Sorry, I was thinking of the PPP.
So we have a couple of minutes left, just very, very quickly. Everybody knows the due date for tax returns was extended to July 15th. If your questions on your stimulus payment, here's the website to find out where it is. And another way to raise capital other than PPP and EIDL, you can take penalty-free withdrawals from your retirement account, assuming certain parameters are met and certain repayment parameters are met. I don't want to go into, again, a lot of details on it at the time, but that is another way to sort of put your hands on immediate capital.
Yeah. Well, I do want to say, Andy, we really do appreciate you kind of coming out here and talking through this with all our attendees. Here's his contact information. Like we've been saying, if you want to reach out to him, best way to do that is through email, correct, Andy?
Yes.
And you can also go to their website. There it is below. And we also included it at the handouts at the bottom left. And we included a lot of cool things in the handouts if you want to go in there and kind of check everything out as far as calculations and their website, this presentation, and a few other things. So go ahead and check those out. Andy, did you want to have a closing message or anything?
No, just again, don't feel free to email out. We are trying to help through this unfortunate circumstance.
Mm-hmm.
Yeah, there were a number of questions too we didn't quite get to. Those are the stuff questions hanging out there. Probably the best thing is email Andy and see if they can get some folks in his firm to get some guidance back to you. I try to handle as many of the real easy ones there, the low-lying fruit. There's a few more complex ones laying out there. Contact Presti Nagler. Let's see if we can get you some help, folks. And we really appreciate you being here today and really hope this was helpful.
All right, everyone. That's it for today's session. I will be closing out the webinar, but please stay on this page so that you can get the evaluation. We appreciate it for everyone to fill it out, but if you need a CPE credit, please fill it. You have to fill it out in order to receive that credit. And thanks again, Andy, and thank you, Val, for stepping in for all those questions. And I really appreciate it, and I know a lot of these attendees appreciate it as well.
All right.
All right, thanks, everyone.
Take care.
Goodbye.
Bye-bye now.